Gold and oil prices are slipping high. I'm Joe Doe here at the NYMEX reporting for The Street. Oil is still dropping below $100 a barrel as we saw crude inventories rise by 5.2 million barrels. It was a little bit more than analysts had expected. Here to talk about what that means for the WTI Brent spread and many others is Jeff Grossman of BRG Brokerage. Jeff, as always, good to have you. So you were telling us earlier that you said this might happen. Do you see the price going lower for WTI?
I see it going low, but not that much near term. I think we pretty much did what we had to do here, and that was really return to basically the 95 area. Now, this is where all the stuff started, let's put it this way, before the Egyptian, the Syrian crisis, all those socioeconomic, geopolitical problems took place, and the market had a little bit of an edge to it. Now it's back to reality, and the inventories are showing you that there's really plenty of product around, and the market now has to get back here where it was pretty evenly priced before this move took place several months ago.
So do you think we hold here?
I think for the near term, we're going to have to catch our breath here. I had a long-term objective of about 95.60. We may or may not see that. I don't worry about that. But now we're going to work in this area. I think now this market probably can be sold on rallies, probably up to and including about $98.
All right, well, there you go. That's Jeff Grossman's take on the oil market right now. We're going to turn now to Mike McGlone of ETF Securities US. Mike, it's good to have you here. We saw gold pop quite high, $25, more than $25 on Tuesday. We actually are seeing not as good of a day today, down a little more than 9. What are you expecting, and why are we seeing this?
Well, first of all, the day's not over. It's early in the day, and the market, little moves intraday and on the days are a little more difficult to really figure out. But the bigger picture is the market's really come back from a decent support level. Again, it's bounced again from that 12 handle. And when the market got down around the shutdown and recently, a lot of those signs that we had of substantial demand came back. One in particular was forward rates turned negative last week. And there's also been anecdotal spreads or indications that the demand from China and India has picked up. And that's kind of an indication of the bifurcated market in the gold market. Physical demand is very strong, yet there's been a lot of paper movement and paper selling. So there's been indications, at least fears, that a lot of this rally has been short covering this week, yet open interest has actually increased. Now, if the market was covering shorts, open interest would have declined in the futures market. So it looks like it's still a substantial market with very solid demand below it. Today, it's a little bit of a move. We'll see how it ends the day. But overall, the market's recovering pretty well.
Did you think the rally that we saw on Tuesday was a bit too much of a jump, or did you feel like it was about right?
Well, it's amazing how the market will move and then sit for a while and drive you crazy and then move all of a sudden. And it's doing that, so I kind of like to look at more on a weekly basis because the days will just make you lose your hair. As you can see, I've done some of that. So, today, who knows really what's driving it, but by the end of the week, I think if the market sustains above 1,300 in gold, it's going to be pretty good. It's 1,330 or now. People talked about the 50-day moving average yesterday at 1,350. Yeah, it's always going to have support and resistance, but overall, I think that the rally is pretty much in place, and I think the market kind of showed us last week that it's in good footing. At least it's potentially bottoming, and of course, the dollar's been weakening. Now, if the dollar continues to weaken, obviously that's going to be very good for gold.
Right. Well, Mike McGlone of ETF Securities, as always, thanks so much. That's what's happening in oil and gold for The Street at the NYMEX. I'm Joe Doe.